Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Tuesday the 16th of March, and absolutely overloaded with contenders. Very difficult to narrow it down into a small selection. So here we are. ARC Minerals is number one in the sense that we've had this unfilled gap to the upside that we had in January. Had a retest of the top of the gap. That was around the 4.5 pence level, never came anywhere near that, and we've broken through the January peak at 7 pence above that, looking for 11 pence or more, which is the resistance line projection from way back in July 2019. If you are a fan of the stock and dreaming of dizzy heights, the target here could be as high as 15 pence plus, which is that resistance line there from June last year. The reason for the optimism, as I said, is the unfilled gap to the upside, which tends to be seen in the strongest of situations, as we'll see with some other stocks here today. Going on to Alpha Growth, which I know had its fans a while back. Here we've got a clear break of a downtrend line there from back in December. That was at 2.5 pence, also broken through the 50-day moving average just below that. So above the 50-day line, looking for the top of the rising trend channel from the early part of last year, as high as 4.5 pence. That could be seen as soon as the end of next month, maybe going into May, but could be seen as soon as the end of next month if we get a repeat of the rally that we saw in November, December. The next situation is Canadian Overseas, which was supposed to be suspended, but still seems to be alive and kicking. At least that gives us a chance to see where the charting position is at the moment. Everything here in the last few weeks has been about trying to break 0.4 pence. If we do that, either pre-suspension or post-suspension, the target here on a technical basis is the top of the June trend channel from last year, as high as 0.75, and I suppose it's by the end of next month or the following month that we might see that wonderful target. As far as the support is concerned, we're looking at 0.3 to 0.35, which is quite obvious, as that was the resistance area in December, January. So above 0.3, 0.35. Looking for a reasonable move to the upside. All the near-term moving averages rising, and in fact we had a golden cross, a very sharply rising golden cross between the 50 and 200-day moving averages a week or so ago, so backing the idea of bullishness here. Onto a stock which has been a very good performer over recent weeks, Critical Metals, and I think I covered it many times, maybe too many times. Current situation is that we're looking for a break of the top of that rising trend channel from September at 20 pence. If we clear 20 pence, then we'd be looking for a rather steeper channel top, as high as 50 pence over the following 2 to 3 months. Stop loss at the moment back below 13, 14 pence, which is mid-March or earlier March support for the shares. Once again, all the near-term moving averages rising very sharply, and looks pretty good in the sense that the latest dip with the support around 13 pence was well above previous resistance around 11 pence. That's normally a positive charting sign. Couldn't resist looking at the next stock again, and it comes in the form of Europa Metals, breaking that triangle that we had from September to around 10 pence. Also now breaking the 12 pence peak from January, so above 12 pence, looking for, well, at least a retest of the 25 pence plus post-July resistance, but even as high as the January 2020 resistance line projection at 38 pence. So 2 to 3 month view, we could be as high as that. As I said, selection today looking very strong indeed at the moment. Stock which was covered yesterday and couldn't resist looking at again is Ferro-Alloy, which I had difficulty saying and still have difficulty saying it, but we managed to hit the top of the channel there from September at 20 pence and above 20 pence, looking for a best case scenario target over the next maybe 2 to 4 weeks, as high as 30 pence, which is a June 2020 resistance line projection. The way things are going, we can actually do that by the end of the week rather than the end of next month, but one wants to be conservative in these things. Just checking whether there was a gap today, but in fact there hasn't been a gap, but at least above 20 pence, looking solid for Ferro-Alloy Resources. On to a stock which I don't cover very much, but is in focus at the moment, Gulf Marine Services. Here we've already had the break of that falling wedge from the end of May last year. That was around the 6 pence level. We had a sort of sideways shuffle here, but if we can get a decent end of day close through February resistance at 8 pence, either today or during the week, we should see the shares accelerate quite well. Best case scenario target here over the next couple of months as high as 21 or 22 pence, which is the top of the broadening triangle from May last year. If you want to be ultra cautious, maybe wait for the 200-day line at 8.6 pence to be broken, but it does look as though the shares are on their way. Good to see Infrastrata come into its own, come into a sort of a bullish phase here. It's been a long time coming, and here we've got a situation where we've broken above the 200-day moving average at 40 pence. I think we had a narrow bear trap there down to 36 pence for the shares. I think actually probably a double bottom there for the shares versus the February support. But we've got a clear break of this resistance line there from December at the 200-day moving average level above 40 pence, and the 200-day line looking forward hopefully to a push to that August resistance line projection as high as 65 pence over the next 1 to 2 months. Clearly, if we revert back to a sub 40 area, then it would take a bit longer, but that bullish divergence there with the March low and a much higher RSI low does suggest that there's momentum there secretly in place for the shares. On to Codel, and another of these mining minnows, which is surging at the moment. Triangle break there. Very narrow price action over the early part of this month, and the logjam break, breaking through 0.12 and above 0.12, the top of the channel from the beginning of September last year, as high as 0.24 could be seen for the shares as soon as the end of next month. Big picture target for fans of the shares, if I can stretch that line, would be up to 0.35, maybe by the end of May, and that's derived from that resistance line projection from the halcyon days of July 2019. That's the top of an overall trend channel that you can draw on the daily chart from that time. Moving on to another stock which is coming up with the goods for the bulls. I think I covered this earlier this week or over the weekend. Can't remember exactly when now, but a gap higher for core potash through resistance, 1.2 pence resistance, and above that looking for a target here as high as 2.2 pence, which is the top of a steeply rising trend channel from back in June last year. Added plus points here apart from the gap through resistance, which is probably the favorite signal here on the bulletin board here, is the way that we had a golden cross for the shares in the middle of last month. So that was between the 50 and 200-day lines, all the near-term moving averages rising sharply. And just the final plus point was the bear trap gap rebound that we had, that selling climax that we had in December, then another gap through the 200-day moving average. So this stock really piling on the positive signals, charting signals at the moment. On to Mcango, which is a favorite for many investors. That's also delivered a very strong move to the upside off the floor of this rising trend channel from October versus 20 pence. And at least while the shares remain above the 20 pence area, we're looking for a top of rising trend channel, October rising trend channel target as high as 35 pence over the next 2 to 4 weeks. The other big plus is the way that we've held the gap higher that we had through resistance last month. That's a very strong signal that we bounced off the floor, well, the top of that gap, and then surged forward. So one would even expect that 35 pence is the minimum on the upside here for Mcango. Maybe if I can fish out a potential higher target, it would be derived from that resistance line there, that one from December, as high as 60 pence. So looking very strong indeed at Mcango at the moment, but we must maintain that 20 pence zone before we get unless we get too carried away on that situation. Quite a few requests for Rambler Metals, which has been, let's say, rather a difficult customer over recent months. Long basing for the shares that we've had here over the last 4 or 5 months. But it looks as though today is day one in terms of breaking that downtrend line from January, let's say, versus the 0.3 level. So and a 0.32 level. While we're above that, if we can get an end of day close above that, we could at least retest the 0.45, 0.5 area over the next few weeks. Be cautious on the shares, which some might be after hanging around for so long. Wait for that end of day close above the 50-day moving average and the RSI to get back above 50 versus 48 at the moment before considering it's safe to come out if you are a bull. Disappointing performance, at least initially today, with Sanlion Energy in the wake of the operations update that the stock or the company delivered. But in fact, technically, it looks rather good in the sense that we had that unfilled gap through resistance last month, one of the strongest signals around. The low today at 29 pence was still higher than the 28 pence gap top, which is a big plus, and a really strong hammer candle there, like a cork in water rebound for the shares. They're now near the high of the day, which is very impressive indeed. Probably all you're waiting for now is, if you're waiting for anything, would be for the shares to break the last March peak at 38 pence. End of day close above 38 could take the shares up to the top of the rising trend channel from October as high as 50 pence. But it looks as though with that very strong candle, the shares and the rebound off the top of the gap, the shares are on their way and will live up to the promise of that gap through resistance. Just a few stocks to go now in this marathon session. First is Vast Resources, which again couldn't resist looking at given how many people follow the stock and the journey that the shares have been through. A couple of points to note here. One is the way that the shares have bounced off line of support from June at 0.08, done that successfully over the course of this month. Maybe more important has been the recovery of that January floor at call it 0.1 pence, and the longer we stay above 0.1, the greater the chance of at least a move towards the 200-day moving average at 0.16 pence. Big picture target for people who love the stock is up to the top of that broadening triangle from June last year, as high as 0.32 pence, maybe over the next 2 to 3 months. But we do have to maintain that 0.1 pence former support on the shares. But looking pretty impressive, especially given the way that we've got bullish divergence here. You see you've got a flat line there on the RSI lows there that we've had since December, and that's despite the way that we've had lower lows for the share. So great divergence on that, and hopefully that will come through for the stock. Another difficult customer in the Rambler Metals type of ilk is Westminster Group. Here it also looks as though the shares are finally snapping the recent base building, let's call it, that the shares have had. Probably want to see an end of day close above the 50-day moving average. That's around 4.5 pence. You can see that we've had intraday spikes through it, but it didn't manage to sustain that. So 4.5 plus pence, maybe 4.3 pence actually is enough. 4.3 pence plus would be enough to then get the shares on track for a potential move towards that December resistance line projection at 5.5 pence. But better to be waiting on that a little bit late rather than jumping the gun on that. Positive as well at the moment, the way the RSI has gone back above the neutral 50 level. It's been below 50 for some weeks now, so that is a positive sign that we're back in a more bullish trend. Finishing off with the stock which has had a gap through resistance, Webis. And as I said, that normally is a smoking gun for moves to the upside. Here we had the gap through resistance at the end of last month, tested the top of the gap with a higher low there after another gap down, and pushed higher since. So that's probably at the moment one can say that while we're above the top of the gap at 2.1 pence on Webis, looking towards the top of a broadening triangle from June last year, as high as 4 pence maybe as soon as the end of next month. That's it for me today. More updates tomorrow.